Hi, welcome to the Fintech Times series of webinars. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Firstly, I'd like to say hello to everyone that's watching this recording. Thank you very much for joining us. Today, we're asking and talking about the evolution of challenger and neobanks. We'd love it if you could follow the conversation using the hashtag Fintech Times Challengers, and obviously follow us at the Fintech Times. Today, we're going to look at the success of challenger banks that seek to address the difficulties of traditional bank accounts, from audience appeal to a focus on user experience and the implementation of marketplaces that harness open banking. Our panelists are going to consider why challengers are so successful and how the public needs have changed during their evolution. We have a great group of people for today's conversation. We're going to talk about the rise, the situation, and also a little bit of the future and where the actual evolution is going to continue. So I'm going to invite them to come and join me on screen. So I'm just going to start off by asking each of you to give you a short introduction. So good morning, Corinna. If you could please give me just a short introduction of yourself, your role, and the company, please.
Sure. My name is Corinna, and I am the VP of Product at Chip. And at Chip, 3 years ago, we set on a journey, a very exciting journey, to build the best saving account in the world. And today we've come a really long way. We have 300 people using our product, and we offer the best interest rate in the UK. We're using AI to understand how much people can save and then help them to put away that money to achieve their goals. And we're also basically getting ready to launch our investment platform, which we're super excited about. And my role as the VP of Product is basically to understand, define scope, what are the new products that we can bring to our users, and helping basically the team to get them out and really get them into the user hands.
Awesome. Thank you very much. And Neri, perhaps you could give us a quick introduction of yourself, please.
Yeah, absolutely. So my name is Neri. I'm VP of Strategy at Tinkoff. Tinkoff has been around for quite some time. We were founded back in 2006, and now we've evolved to being Russia's leading financial and lifestyle ecosystem. We're the third largest bank in the country by number of customers. We have over 13 million of them. And our ecosystem has a broad spectrum of financial services, from credit cards and a number of other credit products, to more transactional services like current accounts, savings, Russia's largest retail brokerage, an insurance arm, an SME bank, an online acquirer. And recently we went beyond financial services to include in our app, or what we call the super app, lifestyle banking services, where people can do ticketing, entertainment, and a little bit of e-commerce, all from one platform. And in my role as VP of Strategy, I'm trying to help the company make the right choices as to which businesses we should be in, and also very importantly, which businesses we shouldn't be in.
Excellent. Thank you very much. Now obviously, what we're sort of going to be talking about today, as I mentioned in the introduction, is the challenger banks and the evolution of them. So I wanted to sort of maybe just go a little bit back in time first of all, and maybe start with Corinna. When Chip sort of started off, what was the sort of the main idea and the main reason for it coming into being?
Yeah, sure. So when we started around 3 years ago, I think what we were trying to address was two key problems. So the first one was that I think traditionally people have been saving towards empty buckets, and our mindset in terms of our generation of millennials is quite different from that. We're saving to achieve specific goals, to achieve specific objectives that we have in our lives, such as buying a house or going on a specific holiday. So the initial idea behind Chip was basically to put some kind of meaning behind those empty buckets and help people to save towards very specific objectives that they set for themselves. And then the second thing was obviously around interest rates. So, I mean, in the past years, interest rates have been going down and down and down. And we really wanted to help our users understand and find alternatives to just the traditional savings accounts that a traditional bank would offer, and really help them to access like the best returns all in one place so that they could make the best decisions with their money.
Yeah, so sort of very much around sort of the user interface sort of area, the actual adoption of the savings mentality, as it were, within the newer generation.
Exactly. So very much making it all about the user experience and like making it easy and personalized to save, and not just like having a empty like bucket or an empty like saving account in your traditional bank account.
Sure. And Neri, maybe coming to you, obviously, you know, as you mentioned in your introduction, Tinkoff has been around since 2006. So obviously a lot of time has happened. Going back to sort of the original incarnation of Tinkoff and the whole group, what was the sort of premise, and what were you sort of set up to try and achieve?
Yeah, exactly. So, you know, we have to go back pretty much to before the word fintech was probably even coined. And the idea at the time, again, we have to think about 2006 and Russia, was that it had a banking sector that was quite underdeveloped and quite complex to navigate for the customer. So it was only branch based, and we had the idea of being the first completely branchless and eventually fully digital digital bank in the country. The idea was actually started from looking at what happened in the US in the credit card market. So we looked at early days Capital One. We looked at what credit card penetration was in the US, and it was something like 2-3 cards per capita. We looked at Russia, it was something like 0.2 or 0.1 cards per capita. And so it was obviously a huge opportunity, not only to bring a new product to the market, but also to do it in a very innovative way that was much more customer centric, and that where everything was based around trying to make it easy for the consumer to actually apply for a product, get the product, and use the product.
Yeah, and so it's interesting that from both of your angles, it's kind of really started with the sort of the customer thing, and I think that's kind of, you know, atypical of what we in the industry of fintech kind of assume, is that, you know, the customer was put at the heart of all the developments, rather than perhaps the traditional incumbent banks were very much sort of in the banking system, and the clients and the customers were kind of just along for the ride, as it were. Thinking again about sort of how things sort of started up, and that obviously one of the biggest issues that most new entrants into the financial services system felt was regulation. So presumably, I'm going to come to Corinna first, that sort of regulatory hurdle was something that you sort of had to think about quite quickly. Obviously, you know, getting the consumer journey and, you know, getting the UX, while it's not easy, obviously, but kind of that's surely relatively simple in comparison to the regulation hurdles that Chip would have needed to go through in the early stages.
Yeah, I mean, we obviously work very, very closely with the FCA to basically like go through all of our new products and ensure that all of our new products are like completely regulated. But I mean, I wouldn't say regulation has been like probably the biggest challenge for us. I think like the biggest hurdle on our side has been like actually like gaining that that customer trust, and really like, especially after like, you know, the finance crisis during 2008, is being really challenging to like make sure that that we could get like user trust and throughout the full journey, and ensure that you know, money is such an important thing, and ensure that like every single penny was like in the right place at the right time, and we could get like the user to trust us fully with like their lifetime savings.
Yeah, okay, that's really interesting then. So as you're saying, less about regulation, more about public adoption and being comfortable with a sort of a new name. Maybe Neri, coming to you, obviously, where Corinna mentioned there sort of the crash of 2008, obviously Tinkoff was live and running in that period. Did that have any major impact, do you think, on your business from the point of view of trust and empathy? Did that sort of cause you to change direction in any way after the crash?
Yeah, absolutely. And so Russia has been a pretty volatile place when it comes from economic activity. So we were founded in 2006. In 2008, 2009, we entered the financial crisis. Then in 2014-15, we entered the Russian crisis, which was when oil prices halved, the ruble devalued also by or halved, the whole banking crisis. And obviously now we had the coronavirus challenge. So over time, we've learned how to build a model that is extremely flexible, where we can accelerate very quickly and spend a lot of money on growing the business, but also just as quickly we can batten down the hatches and just wait for the storm to pass. So that's obviously something that has come with time and with being thrown basically into a crisis only about a year and a half into the founding of the company. So that's very much that flexibility is in the DNA of the company. And that's been, I would say, one of the bigger challenges, much more than, again, regulation, for example. I think I agree with Corinna here. We had a banking license from the very beginning. We started off with a banking license. We're always a regulated entity. And we're kind of the opinion that regulation makes the strongest business models stronger and makes the weaker business models weaker. And so we actually have kind of welcomed the regulation over time. It had made the banking sector much more stable. And I think it's one of the reasons why the coronavirus crisis has been a lot milder in Russia than in many other places, and much more mild than in a lot of the other crises that Russia had gone through. Yeah.
Okay, and maybe just staying with you for a minute, thinking about the concept of the consumer trust. Do you think, as a new entrant in the Russian market, you experienced some hesitation from the public to want to get involved with yourselves and to change from their incumbent bank?
Absolutely. I mean, at the very beginning, we were a wholesale funded credit card monoliner. And only after, well, actually, one of the reasons we started diversifying on the liabilities side and started going into deposits and current accounts was because the financial crisis taught us that wholesale funding, especially in a country like Russia, is not necessarily the most stable and most predictable source of funding. So we had to start gathering deposits. And no one had ever gathered deposits online in Russia from still a pretty small player, right? So obviously, initially, we had to pay relatively high on our interest. And we offered very attractive interest rates on our deposit, which were, however, fully insured because we had a banking license. But over time, as we built the ecosystem, we built more and more products that were very rewarding for our customers and very easy to open, easy to use, and with the best service in the market. We always differentiated ourselves on service. With time, that, let's say, funding cost disadvantage and that distrust has turned us into the third largest bank in the country. And now if you compare us to the top two state banks in the country, which control about 70%, 60 to 70% of the banking sector, our funding costs are something like 70 or 80 bips higher compared to 600, 700 basis points higher just in 2014-15.
Interesting. And maybe coming back to Corinna there, obviously there's Neri was saying a lot about how things have changed and, adoption and developing trust with organizations. What do you think you've seen in sort of like the last year or two since you've sort of started working? Have you been able to overcome that hurdle of trust? And what do you think are the key factors that have been involved in doing that?
Yeah, absolutely. I mean, I think, as Neri was saying, we also had to basically have a really attractive and really easy to use proposition to really bring customers in and actually getting them to start using the product. I think once users start using our app, they actually realize how much easier and how much more advantageous our products are compared to a traditional bank. But as Neri was saying, we started with quite high interest rates that basically were attracting a very specific type of customer to start using Chip and start depositing their savings into Chip. But now, I mean, I think we have a big, very loyal group of customers that really appreciate basically the value add that we bring. So essentially, the AI that we use to understand how much can you save and then help you saving that even without basically realizing, and also the easiness of using our product compared to a traditional bank. As we were saying in the beginning, one of our key focuses is on user experience, and basically to ensure that every single product that we launch is like has seamless access and is very accessible in terms of like steps to open an account or steps to set up an account. And that's like definitely really valued in the market and very appreciated.
Interesting. And sort of staying with you for a minute, that as you sort of mentioned, like sort of the adding on of products and sort of growing that sort of portfolio within them. Do you think that's been key to the success of Chip, is actually getting the customers onboarded and then gradually understanding them, listening to them, and then moving into new product areas and taking them along sort of with you?
Yeah, absolutely. 100%. Like, I think what we always talk about at Chip is basically like, I think Chip has gone through a journey and our customers have come through the journey with us. So at the beginning, like a lot of our users were just looking for savings accounts and were just after like basically interest rates. And now we have evolved the product into basically something a bit more complex, into like an investment platform. And our users have grown and evolved with us and actually like need basically a second product and a second type of investment to start putting their money in. And I think like that's something actually like really nice, that we have grown together with our users, and basically we are offering products that users at the life stage that they're at need. And we have a really rich and active community that we work with that basically help us understand like what are the products that they need and help us like identify and bring those products to market.
Interesting. Okay. And coming to Neri for a second sort of follow-up question to that. Obviously, Tinkoff's offering is expanded massively over the time. You alluded in the last comment to taking on deposits so that you could do various other things. Does that sort of idea of the, keeping the customer into the business for one specific product and then gradually expanding out the product resonate with Tinkoff as well?
Yeah, so as we basically the evolution of Tinkoff, so we started with a credit card product as our main product, but then we started bringing in a lot of customers that were retail current accounts customer, deposit customers, and what we realized is that these customers had other needs beyond just the traditional credit card, and so the idea is that we had a platform to originate, sell, and service credit cards. Could we take that platform and adapt it somehow to satisfy these other needs that were not satisfied through Tinkoff? And so that's what led to the launch of a number of other business lines. On the credit side, now we offer card loans, home equity loans, point of sale loans, and general purpose cash loans. But then on the transactional side, we, as I said earlier, we have a current account plus mobile debit card, which is the best in the market. We have a retail brokerage platform that has obviously has been in huge demand over the last year and a half, and we have over 1 million active customers there. We have an SME offering, an acquiring offering, and all these lifestyle banking. So we started with a core product, but then when we noticed that people wanted other things, we obviously started thinking, well, can we do that? And 2020 was a huge year for that because we all found ourselves in pretty much unprecedented times to various degrees, whether you're a retail customer, a borrower, a transactional customer, or an SME. And I think what differentiated us is that we really listened and were able to react to that. Because to the transactional customers, we made all our rewards very tailored to use cases that you would have when you're sitting at home. So higher rewards on your Netflix subscription or on buying books. On the borrowing side, we started giving restructuring programs to those customers that couldn't go to work and couldn't pay off their loans. So they would just call us up and we'd say to them, okay, let's forget your next month's payment. We'll talk about it in 2 months' time. On the SME side, we helped businesses build websites, integrate online payments. We have our own call center that we could lend out to them so that they could service their customer base. So that ability to react really quickly by listening to your customers, I think that that explains a lot of the increase in trust and the increase in customer numbers that we've seen throughout 2020 and starting this year.
Okay, that's really interesting. Coming back to Corinna on that same sort of subject, obviously, it wouldn't be a webinar without talking about the pandemic. Unfortunately, at some point, hopefully we'll get to a point when we're not allowed to talk about it anymore. But, obviously that has, as Neri said, driven an awful lot of more digital adoption. Did you see that as significantly increased the sort of the willingness of new millennials and various other sort of parts of the population to want to come on to chip and to start embracing the savings offering?
Yeah, absolutely. We had in the last year, so since March last year, we've seen, I think, like 175% more in savings. And also through our app, people can like set, like specific goals that they want to achieve. And we've seen, I think, 150% more people creating a goal as a safety net, which I think is very topical and really kind of like shows what people are saving for. And yeah, in general, like obviously people spending less because of the pandemic. We've seen a huge rise in terms of like the amount of money that was saved through chip. And again, like I think chip as a tool really helped people that were in need of some funds during the pandemic to actually access that money and use it when needed. So we've seen like a huge uptake in terms of savings and a huge increase in amount saved.
Yeah, and I think obviously coming to Neri, just thinking about that sort of the evolution and the moving forward. Given sort of Neri, as you said earlier, now the third largest sort of bank compared to all the other state banks, do you think there is still a place for the traditional banks within the model? Is it a cooperation sort of agreement that you would have with them, or do you think that the challengers are taking over effectively?
Yeah, look, I think time will tell, of course, but I think in terms of who controls the relationship with the customer, I think it's pretty much already over, in that if you're a highly technological, highly digital bank that can launch new services that are a notch up better than the competition, where the experience is so much better, that's something that I think it's already too late for a lot of traditional banks to compete. And so in my mind, banks that are highly technological will be able to maintain that customer relationship and develop it over time and launch new products. And a lot of the traditional banks would just be relegated to the back end, let's say, providing a lot of the pipes, the regulatory framework. And obviously we can get in a conversation about banking as a service and embedded finance. I think that's probably going to be on their end game, because they just won't have the ability to keep up with the digital banks that just know how to treat the customer and how to provide products that are just delightful to use.
It's very interesting. There's a lot of talk of obviously the place for the challenger bank moving into more of a correspondence bank, and effectively it'll be sort of a hidden engine behind everything else with all of the sort of challenger banks on the front. Maybe coming to Corinna on that sort of subject, do you see you working in conjunction with traditional banks? Obviously much more UK centric. It's probably a different sort of setup. Is there an option for a sort of a segmentation of all of the different subsectors of banking, and then to have digital players within that work again with traditional banks?
I think as Neri was saying, like the challenger banks and like fintechs in general have, I think that there's two key things that they do, that we do much better. So first of all is like customer experience and the user experiences at all. And the second thing is customization, which I think is going to be more and more important for all of our users. So definitely, I think challenger banks have that to basically push them ahead and basically be like the first point of contact for a user, and really be the ones that listen to the users and actually act on the user needs and build solutions to those problems. I think, the traditional banks have, if they want to catch up, there's a lot of, they have a lot to catch up essentially, and to get to that point where they can interface with their users in the same way. I think there is still like a role for them to play, as you were saying, probably more in the background, and especially in the UK, for example, with open banking. Like obviously the traditional banks play a key part. Like in our case, we use open banking to connect to the user like traditional bank accounts to basically get like that data and then use our AI to calculate the different types of saves. So we do need to collaborate, and we do need to work with the traditional banks to actually connect with them and build that relationship. So there is obviously like a still very important part that they need to play. But I think things like open banking, regulations like open banking that have been introduced have been helping a lot, to basically bring the two worlds together.
Yeah, I think that's interesting. And I guess the open banking, which is quite UK specific, although it's being rolled out in some other countries as well, in a slightly different way. It kind of feels like open banking is that key to a collaborative approach between the fintechs and the traditional banks and how they can sort of share information. I don't know, Neri, if that sort of open banking concept kind of has the same understanding for yourself and for sort of Tinkoff, in that it gives the opportunity for coexisting of all players, or is it still very much the thinking that one person will own the client and it's the technology company that will do that?
Yeah, the market structure in Russia is very different. So firstly, you have a banking sector which is much newer, and so you don't have the same kind of entrenched players that you've had a bank account with one bank for generations, your parents had it, etc. So there's not as much data that is stored in one bank. Everybody is much more used at shopping around, and so it's quite common for a lot of Russians to have many bank accounts in many different banks. So there's just less of a need to have access to other sources of data. And on the other side, you don't have the same vibrant, let's say, startup scene in Russia, partly because the capital markets there are much more restricted. There's not as much venture capital, let's say, ready to fund a lot of fintech. So a lot of the fintech innovation happens within the existing banks. And again, Tinkoff is obviously one of these examples, but also if you look at some of the other banks in Russia, you will see that a lot of the innovation actually happens within there. So it's just different market structure. So open banking is not, let's say, on the top of our or the regulator agenda.
Understood. And I guess that's kind of nice to see the different of markets, and obviously therefore the evolution of challenger banks is going to be different per market to an extent, even though you're both sort of coming from the same starting point of looking at the sort of the customer journey, the customer experience, etc. I was going to sort of, we're getting close to the end of the time. This is going to be a really difficult question for each of you to answer, but I hope you'll give it a bit of a stab, because we're going to try and do some future gazing. Now, obviously, if in 2019 we did this and said, yeah, 2020 is going to be an amazing year, we're going to be traveling all around the world, we would have got it massively wrong. So I'm not quite sure what our future gazing skills are going to be like, but maybe coming to you, Corinna, what's on the future for Chip? You kind of alluded a little bit to a new product and some investment, which I'm wondering if you give us a teaser for in that sort of summing up as well.
Yeah, absolutely. So we're getting ready to launch our new investment platform, which again is all about basically giving access, giving our users a super easy and cheap way to access investment accounts. And again, as we always try and do, we really try and create a very personalized experience. So all of our investment accounts will basically have specific themes that we know our users care about. And I think that's the direction that kind of investments, the investments market is going to go into. Millennials and Gen Z care about is things such as the environment or gender and equality. So what we really trying to achieve is helping people to invest in themes and industries that they really care about. So that's definitely one of the things that I see as growing in the future. A little bit outside of Chip, but something that I think is gonna increase more and more is obviously interest in investing and accessing alternative assets. So for example, there's been a huge boom in cryptocurrencies over Christmas, and everyone seems to be investing in cryptocurrencies, but there's still like a barrier in terms of like actually like buying cryptocurrencies. Like you need to get a wallet, you need this still like is not super easy for kind of like the normal person. So I think like in the coming year we'll definitely see like a lot more companies basically getting into that space and trying to like ease access to cryptocurrencies and make it like very smooth and very seamless to basically buy Bitcoin or Ethereum or anything. So yeah, probably those two things. And in general, like, I mean, more and more kind of like focus on customization and like user experience. I mean, I can't stress that enough. And, you know, people are used to, you know, Uber and Deliveroo and Amazon and how easy that is. And like money, that is something like even more personal and more important, will like basically go down that path more and more.
Interesting. Okay, that sounds a bit a prediction. I'm going to hold you to some of those. I think the sort of the cryptocurrency, the investment, the trading, that's a whole nother webinar and a whole nother route we could go down talking about. But yeah, it's going to be an interesting area of development, I'd say. Neri, maybe similar sort of question to you. You know, what's the future got in hold for Tinkoff Group? And have you got any interesting sort of predictions or thoughts about where the challenger bank market will go into in the future?
Yeah, absolutely. So we have a lot going on, and as a matter of fact, we're hosting a strategy day next week. So we will be revealing a lot of our goals and targets over the next 3 years. We have a lot of customers, but we need to do a lot more with them, and we have a huge market share potential to grow in Russia, whether on the lending side or even building new markets like the retail brokerage market and the investments market, which are really underdeveloped in Russia. As a bit of a teaser, we are starting to think about international expansion. So maybe going outside the Russian borders for the first time, but it's a little bit premature to discuss more detail on that. And in the challenger bank world, I think, I don't want to sound overly dramatic, but for a lot of challenger banks, it could be a bit of a make or break year, or starting to be, because I think a lot of challenger banks and a lot of challenger fintechs have started with one use case. And they've realized that in order to grow and in order to monetize and actually make money and give some cash back to the shareholders at some point, you actually have to go into other businesses where you might be able to make money. And I think not everybody's going to be capable of doing that. And I would already argue that there's a few fintechs around the world that have already struggled and show that they might not be capable of doing that. So I think you will really be able to discern which fintechs have the right culture, the right business models, and the ability to build something that is beyond, you know, a pure one product service.
Very interesting. Yeah, you know, we've been hearing about this sort of consolidation effect of challenger banks for some time. So I fully agree with you there that there is that. I'm sure Corinna would agree with me. You know, excellent companies such as Chip that have based their services on something more tangible than just an account probably have a little bit of a better offering there. But yeah, some of the much larger challenger banks that we've seen that have taken some of the non-profitable elements of a bank and made that their core focus, they may be in for a bit of a harder ride. Unfortunately, we've come to the end of the webinar. Time flushes by. I could have spoken to both of you for another hour or so. So thank you both so much for taking the time out of your busy schedules to speak with us today here at the Fintech Times.
Thanks a lot, Mark.
Thanks so much for having us.